Hi, I'm Dave Gentry. Welcome to the RedChip Money Report, where we help investors find the best names in emerging growth stocks. Did you know that RedChip was the first to put coverage on Czirr software, a NASDAQ cloud computing company serving Fortune 500 customers? The stock was trading at $4.51 on February 13th when we first issued coverage. That was in 2012. July 13th, the stock hit $8. That is a 77% gain in 5 months. And that is the RedChip way, finding undiscovered gems before the Wall Street pros find them, before the pros establish their large positions and help propel these smaller companies upward. Now, in just a few minutes, you'll see interviews with executives from 3 NASDAQ companies: a biotech company that's developing personalized immune therapies for cancer, another company in the nuclear energy space on the cusp of reaching some major corporate milestones, and a company developing a drug that treats chronic liver disease. Our first company today is Northwest Biotherapeutics, symbol NWBO on the NASDAQ, a developer of therapies that use the patient's own immune system to treat cancer. Recently listed on the NASDAQ and completing a $12 million capital raise, this company's technology is a potential game changer in the treatment of brain cancer, prostate, and ovarian cancer. Let's go to our interview with the company's chairman and CEO, Linda Powers. I'm here with Linda Powers, the CEO of Northwest Biotherapeutics. Linda, thanks for being with us today.
Thank you.
Now, you've had some extraordinary developments in the past 12 months with your cancer technology. I want to talk about first these relationships, your partnerships with the Fraunhofer Institute and King's College. Okay.
Well, we're very fortunate in both of these relationships. These are premier institutions. Fraunhofer Institute has 20,000 scientists, engineers, and business people. They're based in Germany and all around the world, and they have chosen us as a priority partner in immune therapies for cancer. And we're working with them on all aspects, the clinical trials, the manufacturing, and so on.
So you're in a phase 3 right now on brain cancer.
We are.
Which also could target as well ovarian and prostate cancer as well.
Yes, so the same product that we have now in the brain cancer phase 3 clinical trial is the one that we did previously in a small trial with ovarian cancer, where the results were recently published by the University of Pennsylvania, and great results. And another product line that we have was used in prostate cancer, great results, added 1.5 years of survival and more.
You also had a striking development in regard to your treatment of inoperable, what were considered inoperable or solid tumors, cancer tumors. And in your studies, or in your treatment in in animal trials, you were able to shrink and in some cases eliminate established tumors.
That's right. So a solid tumor cancer is a tumor in any tissue of the body as compared to a liquid tumor like a blood cancer or leukemia. In our animal studies, the preclinical studies with our immune therapy, it involved direct injection of a special kind of immune cell into the tumors and into some of the tumors, but not all of them. And the results were very encouraging. The animals eliminated all of the tumors in their body, not only the ones injected, but also the ones that were not injected, a systemic response by the immune system of the animals.
I don't want to over-dramatize what you're saying, but it is hugely significant. It is a potential game changer in the treatment of cancer, your technology. Is that correct?
Well, if we're able to see anything like even a portion of those kind of results in the human clinical trials, and that's the next step, is to test that, which we're about to start doing. If we see even a portion of the same results, that will indeed be huge, because today, patients who have inoperable tumors are basically out of luck. It's a huge unmet medical need and a huge market.
What's the essential value proposition, Linda, for investors today? Why should they be positioning now in your stock?
Well, our company has made tremendous operational progress with 2 products in phase 3 trials and this one we just talked about, to eliminate existing tumors, starting a phase 1/2 trial. But our stock price doesn't reflect that yet. Our stock price still is at a quite low level that doesn't yet reflect all of that operational progress.
And I want to note that Czirr Biotechnology was bought out by Johnson & Johnson for $1 billion at about the stage you are right now in your phase 3 clinical trials. I also want to note that, Linda, you have a reputation, a long history of developing cell therapy companies, and sit on the boards of some very prestigious institutions such as the Trudeau Institute, which is a leading institution in immunology. Linda, thanks for being with us today.
Thank you.
We'll have you back soon.
Thanks very much.
Now, this stock is trading below its offering price of $4. Now, remember I told you they recently raised $12 million. At least it was trading below $4 at the time that we recorded this interview. Now, if only one of their drugs reaches commercialization, the value of that drug could bring $1 billion in value to Northwest Bio. And at that point, the stock is no longer a $3 to $4 stock. No, it could reach $30, $40 or higher. I want to note NWBO is a client of RedChip companies, so maybe I am biased. However, there are a lot of believers like me buying this stock. And I want to note that BioVex, a company that was also in phase 2, phase 3 clinical trials for a cancer drug, was acquired by Amgen for $1 billion. Czirr Biotechnology, another biotech with a phase 3 anti-cancer drug, was bought out by Johnson & Johnson for nearly $1 billion. Now, what would happen to the stock of Northwest Bio if they get bought out by Big Pharma? Well, safe to say, it's not going to be trading in the $3 to $4 range. Now it's time for our Wall Street book review. This week we're talking about Bull by Maggie Marr, a history of the boom and bust from 1982 to 2001. Bull was published in 2003, 2 years after the collapse of the internet bubble. By 1999, 49% of all Americans owned stocks. Wealth was rising at an amazing rate. Trading on the net was just starting to come into vogue. It was not uncommon in these years for waitresses and waiters, college students, to say nothing of the Wall Street pros, to earn 20, 30% a year on their money, Maggie Marr tells us in her book, Bull. She notes, when individual investors found that they can make more in a day trading online than in a month on the job, they felt the flush of power usually reserved for the very rich. We would also learn that Enron, Tyco, WorldCom, and Adelphi, and many other companies were cooking their books during this time period while stealing millions from their companies. If you want to learn how bubbles in the market form and the consequences of the collapse of those bubbles, with a particular focus on how the players, the crooks, the shysters, and the naive contributed to the bubble and the wiping out of trillions in household wealth, read this book. Now let's go to an interview with Seth Grae, the CEO of Lightbridge Corporation, symbol LTBR, on the NASDAQ, a company operating in the field of nuclear energy. Lightbridge develops nuclear fuel technology and provides nuclear power consulting and strategic advisory services across the world. Seth, thanks for being back with us. Seth Grae, CEO of Lightbridge Corporation on the NASDAQ. You see the symbol there. Glad to have you back here in Orlando with us.
Thank you. Pleasure to be here, Dave.
Now, last time we talked about your fuel technology. You're developing your own nuclear fuel technology. Russia and the U.S. are testing it or will be testing it this year. Talk to us about the market opportunity for that technology.
Well, there are about 430 operating nuclear power reactors in the world. 104 of them are in the U.S. There are 70 more under construction around the world as we speak. 5 of them are in the U.S. And there will be hundreds more built around the world in the BRICS countries, in Saudi Arabia, in other countries. So the market for nuclear fuel in the existing and new reactors is many hundreds of reactors. A typical reactor spends about $80 million per year on fuel. So it's a pretty large market. Very large market. Your fuel is more efficient. It will generate savings for these power plants, $60 million for each reactor if they're using your fuel. Right.
How are you generating revenue today, right now?
Today we're generating revenue through our consulting business. The people in the company, in addition to designing nuclear fuel, also advise governments, government-controlled entities that are deploying nuclear reactors for the first time, or for the first time in a long time. It's a place that hasn't done it in quite some time.
So you're in the United Arab Emirates, Russia, to some extent the U.S., so you're all over the world where these power plants are being built. Now, where do you take your technology in your consulting business in 2013?
Well, we're taking it to the next level, creating what I think is tremendous value for the industry. The nuclear reactors that are being deployed around the world are mostly drastically behind schedule, over budget, not where Lightbridge is advising. I think we bring tremendous value to the countries that are deploying reactors on getting these deployed safely, responsibly, on time, on budget. Also, for the nuclear fuel technology, working with major players in the industry, with governments, demonstrating the benefit of the technology, not just tremendous safety advantages of our fuel and non-proliferation advantages, but real savings of about $60 million per year per reactor, which is meaningful to these reactors, some of which are just about breaking even or losing money with lower natural gas prices.
You know, we at RedChip, before we recommend a stock, we look closely at the management team. You have a world-class management team. Talk to us about some of the key people. I mean, you yourself sit on a board that actually advises the Secretary of Commerce in the U.S. on nuclear energy matters. But tell us a little bit about this management scientific team.
Well, we do have a very strong management team and scientific team. Our COO and CFO, Jim Guerra, was the CFO of Exelon Nuclear Generation, which is the largest nuclear generator in the United States. Our Chief Nuclear Fuel Development Officer, Jim Malone, was the head of nuclear fuel for Exelon, the largest buyer of nuclear fuel in the country, and his successor sits on our Nuclear Utility Fuel Advisory Board.
It's impressive. It's very impressive. Yeah. Why should investors look at your company now? The stock's trading at $1.80. Why buy now?
Because of the value the company will be creating for this very large and growing industry, actually. And it's very important after Fukushima that there be this focus on nuclear safety and that nuclear be able to compete with lower natural gas prices. The people who have built these multi-billion-dollar reactors need a way to improve their economics. That's what Lightbridge is bringing to them.
New contracts, huge market opportunity, great scientific team, stock trades at $1.80. You show you're able to generate new contracts, which you think you will. And stock should be much higher than it is now, in my opinion. Seth, thanks for being with us today.
Pleasure, Dave.
My value proposition? Look at the chart on this stock prior to the Fukushima meltdown in Japan. You remember the great earthquake in 2011. By the way, I was there in Tokyo the day the earthquake hit. But back to Lightbridge. The stock traded for most of 2010 and the first quarter of 2011 between $5 and $6. After the earthquake on that fateful day of March 11, 2011, the stock begins a long, steady decline, falling below $2. Why? Well, the company did not renew contracts. It did not get contracts that they would have received if the meltdown had not occurred. But now things have changed. Nuclear power plants are not going away. In fact, 70 nuclear power plants are currently under construction worldwide, and all can benefit from Lightbridge's technology. Natural gas will not replace nuclear fuel. In fact, the studies show that nuclear power plants who use Lightbridge's technologies are very close to a cost equivalent of natural gas. Now, I like this stock at current price levels. Could it reach its pre-Fukushima highs? I believe so. They have plenty of cash to fund operations, and we should see new contracts and the fulfillment of old contracts in 2013. The value proposition makes a lot of sense. Buy a stock that has been beaten up, whose market opportunity is getting better, which has cash to execute, and a great technology or service, and you're poised to make money in the future. Look at the chart. The stock is now beginning to trend upwards on low volume, a very good sign. I want to note that a very substantial smaller cap fund called Special Situations is an owner of this stock. I've met with analysts at this fund. They are smart and they're disciplined and they see what I see in Lightbridge. They believe is going higher, much higher. Now let's go to our interview with Jim Czirr, the Executive Chairman of Galectin Therapeutics, symbol GALT, on the NASDAQ, a leading developer of therapies to treat fibrosis and cancer. I'm here with Jim Czirr, who is the Executive Chairman of Galectin Therapeutics. Thanks for being with us, Jim.
Thanks for having us.
Now, your technology is targeting unmet medical needs. Tell us about it.
Yes, we've got treatments that we're developing for cancer and for cirrhosis of the liver, fatty liver disease. These are fatty liver disease and cirrhosis. There is no treatment today.
And there's about 9 million, maybe 15 million estimated people in the U.S. alone with fatty liver disease.
Yeah, it's a silent epidemic. They're talking about, NIH estimates that between 9 and 15 million Americans living here in this country have the disease. They estimate that 3 million of them are going to develop scar tissue in their liver and will become cirrhosis patients. There's no cure for that at the moment, and this is a very important discovery for those people.
And galectin proteins were only discovered about 20 years ago.
Yeah.
And you're one of the leading companies in the world that are using these.
Yeah, we were the first ones in on this idea. We are the experts in the area. We've just published a book that came out of the result of a symposium that had 50 researchers from all around the world attend. And that book's for sale, by the way, if you want to buy a copy from them.
I'll take several. You also have a CEO that's very well known in the biotech world. Tell us about it.
Oh, Dr. Peter Traber is an expert in liver disease. In his past, besides being a world-renowned researcher himself and well-published, he was the chief medical officer in charge of global drug development for GlaxoSmithKline. So Peter's, he's a
heavyweight.
Yeah.
Now, tell us about these animal trials.
Well, we have a picture here to look at. On the left-hand side of the screen, you're looking at a liver that came out of a rat that was artificially induced to have scar tissue in their liver. And there was a group of them. And they took half of the animals and treated them with our compound, our treatment. And you can see on the right-hand side that the scarring that you see on the left is virtually gone. Now, Dave, this is really important because this is the first time in the history of research that anybody has ever been able to reverse scar tissue in an animal. The scar tissue is virtually comparable in human beings. It's collagen. The galectin-3 proteins that make the liver cells turn on and create scar tissue are the same galectin-3 proteins in both humans and in animals. We're feeling very confident about this mechanism that we're going to get a good result in humans.
Recently raised $12 million, Aegis Capital out of New York. What does this mean for the company?
Well, we have money in the bank that we need to complete this phase 1 trial on fatty liver disease. And and we're going to be measuring blood serum markers that are the same serum markers that they use to diagnose the disease, as well as safety.
Potential for relationships, licensing with big pharma?
There's always an opportunity for that. We've had contact with a number of companies, and with the farther we go down the clinical trial path, the more we expect to hear from larger pharma. And the reason, Dave, is because this is perhaps the, if not the largest, one of the largest opportunities in the pharmaceutical space left. To find 3 million patients to as many as 9, 15 million patients with fatty liver disease, but 3 million with, heavy scarring in their liver, that represents just a gigantic market. I mean, if you look at cancer as an entire category, you add up breast cancer, colon cancer, pancreatic cancer, all of them, you get roughly 3 million people.
It's an enormous market for you. Aegis has a $7 price target on this stock, currently trading at $2.60. The stock does like to move upward on big news. Can we expect some big news over the next 12 months?
Well, we're going to be, with any luck, we'll be starting our clinical trial on patients in the very near future, and we should be able to finish that this year, and if not this year, early next year. That's a possibility for very big news. We also have a phase 1/2 clinical trial in cancer that's being done in Belgium right now by the Ludwig Institute, and that would be also big news in the world of cancer.
I think we're poised for significant upside in this stock. It could dance a little bit in the midterm, short term, but great management team, great technology. I think our investors should take a close look at your stock now. Thanks for being with us, Jim.
Thank you.
My value proposition: 3 reasons I like Galectin Therapeutics. Number 1, very large market opportunity. 2, preliminary trials, very promising. 3, very strong scientific team. And technically, as of the date of the recording of this show, February 14, 2013, Barchart.com gives this stock a buy rating across the board. 20-day average, 50-day moving average, it's a buy. Quick lesson on technical analysis. You cannot rely on simple technical ratings in buying stocks. If technicals were always right, we would all have made fortunes 10 times over buying on these technical indicators. You should always look at the fundamentals, understand the management team, the near-term and short-term catalyst, long-term catalyst. Examine the income statement and the balance sheet. Does the company have enough capital to fund operations for at least the next 12 months? And if not, are they capable of raising capital? Cannot rely on technicals. But this stock looks very good technically. Now, this company has a superb leadership team with dozens of industry veterans, like the CEO, Peter Traber, medical doctor. Dr. Traber is President Emeritus of Baylor College of Medicine, where he was the Chief Executive Officer from 2003 to 2008. From 2000 to 2003, he was Senior Vice President of Clinical Development and Medical Affairs and Chief Medical Officer of GlaxoSmithKline. Go to the website, learn more about this team and this company. I like it a lot. In summary, Galectin Therapeutics, promising anti-cancer drug using a revolutionary technology. A scientific team second to none. Technically, the stock could not look better, at least of the day of this interview, February 14th, where Barchart.com gives this stock a 100% buy rating across the board on every metric. Lightbridge Corporation, buy a stock whose fundamentals are improving, serving a large multi-billion-dollar market in the energy sector, with a paradigm-changing fuel technology, and with very convincing third-party peer-reviewed reports validating both their technology and their business model. And you could reap profits that exceed the 10% you might make on a blue-chip stock this year. Northwest Bio, show me a biotech stock with 2 phase 3 clinical trials. Impressive, compassionate study data on their cancer drugs trading below $4, the price of its last capital raise. And I'll show you a stock that could light up like a Christmas tree and bring its investors a very happy new year. Remember, balance your portfolio. Don't put all your money in smaller caps. They are the most volatile asset class. And while gains can be substantial, both in the short term and long term, you should also be prepared for the downside. And remember, I'm not always right, and neither is RedChip, and neither are the best analysts on Wall Street. Best to buy smaller cap stocks in baskets. While one may not perform as expected, any one of the others in your cornucopia of stocks could make up for any losses while providing very lucrative paydays. Give us a call today at 1-800-REDCHIP and order a free due diligence package and research profile on any of these companies. Listen to full presentations by them on our website, redchip.com. And sign up today for our weekly newsletter, our small cap newsletter, the RedChip Money Report. We'll give you the best names in small cap stocks every week. And sign up for the RedChip Stock Challenge for your chance to win a $50 Visa gift card every month. Just pick the winning stock out of the RedChip portfolio. Also, follow us on Twitter, RedChip Nation. Email us at money@redchip.com to request more information on the companies presented today. Don't forget to come back next week, same time, same place, to learn more about the best emerging growth companies in the market today. And if you have a company that you believe warrants our attention, or if you have a company that wishes to go public or raise capital, then contact us to learn more about RedChip's easy, inexpensive going public consulting services. Now, we're not a broker-dealer. We're a consulting firm. Thank you. We'll see you next week as we continue our search for the best names in emerging growth companies. I'm Dave Gentry. Hi, I'm Dave Gentry, president of RedChip Companies. For 20 years, we've been in the business of servicing both private and public companies, providing both research and investor relations services. During this 20-year history, we've developed what we call the RedChip Way. The RedChip Way defines the characteristics, the qualities that we look for in a RedChip team member. A RedChip team member never stops learning, never stops growing, never believes he has arrived. He constantly seeks to improve his performance, his knowledge, his skills. He may fail at times, but he never quits. He never stops pursuing the goal to be the best in the business in his current role. He is reflective. He evaluates himself and admits his own failings first. He desires to know where he falls short, desires to know where he can improve. And if he falls short in any of these areas, he gets back up and dusts himself off and tries again to reach the pinnacle of success, always striving against the hard and deceitful forces that stifle growth and high achievement, self-satisfaction, which leads to mediocrity, cynicism, which poisons the soul, and complacency, which, if not corrected, always leads to low performance. The RedChip team member is a disciplined, focused knowledge worker, looking out not just for number one, but for his teammates as well. He strives to stay positive in the face of adversity. He sees adversity as an opportunity to get better, to improve the organization, to improve himself. This is the RedChip way, and it is the only way. Thank you.